Hey, everybody. Welcome to the morning market briefing. It's Thursday, March 5th, 2026. How we doing?
March the 5th be with you. A lot of people are
Yeah.
saying.
March the 5th. Big day. Big day. Y'all had a little, what would you call it? A symposium yesterday? A conference?
Forum.
A mini conference? A forum. There we go. That's the word.
Which is a kind of a good word. I mean, I like the symposium word that we have for our annual, but forum is, I mean, it has some
Yeah, you're either for them or
Greek.
you're against them. You know?
Greek undertones to it.
Yeah.
Which was actually, Greece was very maligned by senior economist and chief economist Brian Westbury yesterday, but we'll get into that in a minute.
Yeah. Curious what all was discussed. Felt like, seemed like a very patriotic event.
There's a lot of taking it to the bad guys talk, which
Which is what you want out of forum.
which is what I love personally. So yeah, let's get into it, Ben. You start off, and I'll add color commentary.
Yeah, I think the biggest thing, I thought CEO and founder of First Trust, Jim Bowen, led off. I mean, he is always electric.
He's got, was it the same stump speech?
Oh, it's the greatest hits. But it's like you go to a Billy Joel concert and you want to hear "We Didn't Start the Fire."
Yeah, he's the warm up act. He comes out firing. He gets the crowd frothing, and then it's time to go.
I think the CIO McGarrell was a little bit flat relative to his normal. I mean, he was still very good, but I think he was on the flatter side. And then Westbury closed, and he had some really good thoughts, and I want to talk about a couple of them. The first is that he really described the Keynesian versus Austrian economics in a way that I think a lot of people might understand. So you got to think about the marginal propensity to consume, which means when you get $1, how likely is it that you're going to go spend that dollar?
Mm-hmm.
So for higher incomes, it's a much lower propensity to consume because they've already consumed all they need. Now they go and save and invest that money. That's why, they come to people like us. When you have excess dollars, you invest that. And so what Keynesian's view is a consumption-driven view of the world. It's demand-pull kind of economic growth. And so what they say is if the money is just being saved or invested, it's not working in the economy. Therefore, we might as well tax that dollar at a higher rate than the other dollars that are consumed. And what we're going to do with that money is we're going to use it either in government spending.
We're going to get it to people that will spend it.
We'll either get it to people who spend it or we're going to spend it ourselves.
Yep.
But some way or the other, we're going to get it spent. And so that's the Keynesian's view, which, can make sense from that consistent view. And what we've seen over the last 20 years is that we've seen a dramatic increase in tax revenue, and we've seen a dramatic increase in consumption. Real consumption is up over 60% over the last 20 years. That's real dollars, not nominal, not inflation. That's inflation adjusted. Meanwhile, production is down 8%. And so everything from that Keynesian view flows. And so the consumption drives the economy. And so their view is if we need to get more economic growth, we need to tax more on that marginal dollar, and we need to get that money flowing a little bit more. All sounds very logical. The Austrian view says, actually, investment is what drives the economy because that creates jobs, and that creates spending. So it creates money from this, they call it supply side. And so they say what we actually need to do is lower taxes across the board and lower government spending and keep more money in the pockets of corporations and individuals to save and invest. And indeed, what we've seen over the last number of years is that the savings rate has gone from 10% to 3% in the United States. Consumption's exploded, but investment and production is down. And so what Westbury was basically saying is that this has created, and other countries have noticed this, and so where our consumption has increased a lot and production has gone down, other countries have increased production and lowered consumption, which creates these massive trade imbalances. Mm-hmm. And so this is why we have the tariffs that we have, is that the tariffs are treating the symptom, not the cause. And so Westbury would say, he would be against tariffs, he would be for lowering taxes, and be for shrinking the size of the government, which he admits is a fairly difficult task. And he says it's not going to happen without Congress.
Yeah, I think the good analogy and the tough part about Austrian economics is some of the most annoying eye roll people on the planet are very into
hardline subscribers.
His
Hayek.
Yeah, well, Friedrich Hayek is the big one, but Ludwig von Mises. If you know who that is, you probably are tough to hang out with and/or went to Auburn, because that's where the Mises Institute is. The Ludwig von Mises.
I know a super user out there now
is already
email incoming.
Yeah, the keyboard is on fire right now. But Ludwig von Mises, the father of Austrian economics, the school of Austrian economics is at the university, or Auburn University, and I know a handful of people who went there who love to talk about that, and they're aggressive libertarians. But I would also say Javier Milei is a big Austrian economics guy, so I love the concept, but man, it's one of those niche hobbies that people have or niche interests that make them really tough to hang out with. And it was me at a younger age, I would definitely be like, oh, well, let's talk about The Rise of Serfdom, which is a book that is very hot in those circles. But I think that the easiest analogy is basically the tariffs are GLP-1s. You know, consumption is out of control.
Yeah.
How do you do it? You curb consumption. So you make it harder to consume. That's GLP-1s. But the problem is when those come off, the problem is still there. You're going to just go right back to consuming the same amount. The Austrian economic side would be doing squats.
Yeah.
You're putting on muscle. The more muscle you put on, the more robust you are. So even if you consume more, it just burns right off, and you're continuing to hum along. And that's the problem that we've atrophied so much. Our muscle mass has been just carved off, and it's in China. That's where the manufacturing is, or Japan, or all these different places, Vietnam in the case of, the shoe factories. And so what we need to do is, if we're going to do the tariffs and we're going to curb consumption, the other piece is getting that investment, which Trump talks about a lot, all the trillions of dollars that are flowing in here to start working on that muscle mass and standing up manufacturing. What's more standing up than doing a squat? You literally squat down and then you stand back up. And so the point is, we've got to be working on the underlying symptom, which is we don't have any muscle mass. We've become soft. And the only way to continue to grow is to get fatter and fatter and fatter. And so that's really, I think, the easiest analogy of Keynesian versus Austrian economics is one is a Band-Aid that
treats the symptom.
And the other is getting stronger. And so that's really how you look at it. But if you actually sat down and talked to someone who's really interested in Austrian economics, it would not be that interesting of a conversation. So I would say avoid that with as much as you can. So that's all I have to say about that.
All right. So America needs to get jacked again.
Yeah, we're getting jacked. We got to do the hard work. They also made a really interesting point. It's sort of there's two paths we're on right now, which is, and there's a little bit of talk about the no kings thing, which is that America exists to be free, to dominate, to do what you want to do. And right now, the struggle is against those forces. And, Klaus Schwab was brought up, which, let them eat bugs and they'll own nothing and be happy, which is, a big
crazy
thing.
That he's turned out to not be a great guy.
Yeah, not a great guy. But if you look at, and I've talked about this in less colorful terms, but, you're fighting the Ursulas of the world in Belgium who are setting rules for all of Europe, and they have absolutely no control over what they do. And that's something we're fighting against now. I mean, for the first time, we're standing up to Europe and just being like, get a life. You know what I mean? Let's go do something. And I mean, even the constant fining of our tech companies. There's talk this week. They're like, hey, we let Siemens and all these other, European companies, SAP, operate here. We're not constantly fining them for all kinds of stupid stuff to fill our coffers. But Europe does that to us all the time. It's like, now we got to drop the hammer on them because we're tired of that garbage. You're fighting, the anti-freedoms of China and Iran and Venezuela and Russia. And we're seeing that fight, start to really heat up as well. And then you've got the people who just want to cause chaos, the cartels, the people screaming in the streets in Minnesota. And the problem is, like, all of these people have been a unified force for 50 years pushing against this beautiful freedom that we have. And the fight's going to be messy because we haven't done anything. We haven't done our squats in a long time, and now it's time to start kicking ass and taking names, and that's going to be a brutal fight, and that's going to cause a lot of volatility, and we're seeing that already. I mean, the war in Iran, whether or not you support it, I feel kind of weird about it, but that's a fight against people who hate us, and I suppose that's an interesting point when you think of it in these terms, which is these are the three fronts we're fighting on right now, and I thought that was a really interesting takeaway, but I mean, it's going to lead to volatility, but the result would be we're going to be bigger, stronger, faster. We're eating our vitamins, we're saying our prayers, just like Hulk Hogan would want us to do. And I think as a child of the 90s, that's something we can aspire to,
And it seems like if that is the angle and you're subscribing to this, we talked about Bessent's role the other day, but that guy's ready to squat.
Yeah, that dude
guy's ready to squat.
He's ready to just, stand in the back alley and wait to stab somebody at any possible moment. And so, there's never been anybody I think who's been better at the job they've been selected to do than that guy. I wouldn't vote for him for president because I think we might end a nuclear war. We would win, but it would be a hard fought war.
It is wild that in this administration, I mean, there's a lot of characters. We don't even talk about the character that is Pete Hegseth anymore because Pete Hegseth is just doing so much stuff. So we're talking about his actions.
He's a snooze.
But it's wild that within this administration, it's like, man, we can't let the Treasury Secretary be president.
No, he's the scariest guy, and it's wild because you'd be like, which of these guys, if you read their resume on paper, is the real killer? And the answer probably wouldn't be Scott Bessent, but it's not the gay guy from Charleston who lives in a pink house, but you got to be careful, man. That guy will
He'll take you out.
He'll meet you in the back alley, slit your throat, and throw you in the dumpster. Not think twice.
Sell your organs real quick.
Yeah. I mean, he's out for blood always, and so I'm just glad he's on our side. But I mean, it's a new world, man. Economic warfare is powerful if you use it correctly, and he knows how to do it.
And I think the big takeaway is, we could have continued on the path that we were on, and would not have had potentially the volatility that we're having right now in the markets. But the administration has taken the view that this needs to happen. But I would say, putting it all in context and what it means for the markets, they made some good points yesterday too. That look, we're kind of expensive on just a flat valuation basis, and we have all these other things going on, and for that reason we should be cautious. And one of the ways they said we could express that caution is continued broadening out of the market. There's still concentration in the top end, and they think that with earnings accelerating in the other 493 stocks other than the Magnificent Seven, they think that that's a place to be, and it's difficult argument to argue against. I do think that some of the Mag 7 stocks have become cheap. I'm partial to Amazon. Amazon had a good day yesterday. We're seeing Broadcom have a good day this morning. So I think that there are opportunities now in some of those Magnificent Seven stocks that maybe didn't exist at the beginning of the year. But I do hear their point on the broadening out of the market.
We got ISM services yesterday, probably about the time you guys were driving down to the forum. What stood out, Ben? Relatively decent report.
I mean, it was the total opposite of the ISM manufacturing survey. So I think ISM services was relatively weak in January, and this one was strong. Manufacturing was surprisingly strong, and then fell a little bit in February. So kind of net, good reports from both. What was interesting about the ISM services number is that prices actually fell surprisingly from an index reading of 66.6 to 63, even while new orders accelerated from 53.1 to 58.6. Home building remains a weak spot, but everywhere else is pretty robust. If you're talking retail trade, wholesale trade, and importantly, logistics is a really good area. And they did make some points on tariffs, and they said, look, with the tariffs chopping and changing, we feel like we can handle that now. We're built for that, and at least on the services side of the economy. The manufacturing report was the opposite. But on the services side, you're saying we're pretty robust. So we get a new GDP Now revision for Q1 later today. and it'll include the ISM services report. So we were 3% flat coming into the day. So I'm curious if what we go up to. I would guess that we probably go up to a 3.3 or 3.4.
Woo! It's a hot number.
That's the hottest country, hot and strong. Beige book coming out from the Fed. Always kind of an interesting way to look at survey data and kind of build a mosaic around. It seems like things are just marginally better or worse across the board.
Yeah, and this is what the Fed puts together, and this is what their Fed reviews. And I think what you can see is that generally activity is decent, consumer spending is decent, manufacturing has improved a little bit, but not great. But I did a deeper dive into the prices and the employment side, and there is some nuance in the prices side. So prices continue to rise, but in early 2025, it was characterized as costs are rising with strong pass-through of those costs. In late 2025, it was characterized as costs are rising, but margins were getting squeezed. And then now in early 2026, they say price sensitivity limits increases. And we're actually seeing that in the grocers today, and we'll talk a little bit about that in a minute. But I would say that prices are probably disinflating, and this beige book would be supportive of that. Now, whether the Fed listens to those conclusions or not remains another question. But I do think on the prices side, what we're seeing in the data is supported by this qualitative commentary. And then similarly on the employment side, though, it's been a little bit more mixed. Right now, after a hiring freeze in late 2025, that people are saying it's stable but cautious right now on the hiring front. And I think that that's probably a fair characterization of what we're seeing in the from company reports as well.
Yeah, you mentioned pricing specifically on the grocery side. Kroger noting they're making price investments, essentially cutting some costs.
Yep, lower prices is the theme of the day. Kroger is about flat pre-market. Grocery outlets down 25%. They're really getting squeezed. They say things grew more promotional. They need to deliver clearer value. But just in the first, page and a half of the Kroger transcript, they didn't start their call until 8 a.m., so I don't have the full thing. But they said, we made price investments to lower everyday prices, improved our value perception. We're continuing to invest in price. And we're making important steps to strengthen Kroger for the long term, lowering prices. I mean, you hear lowering prices as the consistent theme. They understand the consumer is focused on value, and they need to deliver that via lower prices. And they'll try to make margin up in some of those, gimmicky stuff at the end of the grocery store. But those core prices are going to come down. And we're seeing that at General Mills. We're seeing that at Kellogg. We're seeing that at Kroger. We're seeing that at Grocery Outlet. This is a theme. We built an internal inflation tracker, I think, that we may or may not have shared.
We've not yet, but it's at 1.3?
It's at 1.3, and a big portion of that is declines in grocery bills. So and what's really interesting about that report is that the perception of grocery bills is that the prices are up 19% on a year-over-year basis. So that is remarkable that we have a perception that prices at the grocery store are out of control. They're up 19%, and yet all of these grocers are lower in price. So they need to communicate that better to customers. But I think it's also something we're going to continue to see more of. We have Costco reporting tonight, and I'm sure they're going to talk about leading on the prices as well.
We got some detail that I guess was maybe speculated on, but with the Kevin Warsh nomination, he has officially been submitted to the Senate, but notably replacing Stephen Moran, Tom, which just begs the question, what's Jay Powell doing? Is he going to stay on?
I don't know. It's one of those things. I haven't looked at the Kalshi odds. I don't even know if they have odds on that, but I kind of think he's going to try and do it. If I had to guess, I don't really know, but I'm going to guess Jay Powell's going to try and do something because he consistently likes to put himself in front of the cameras.
The drip of news, his quietness on the subject, plus the news, whether it's from Timorous saying Powell doesn't rule out staying on, or even last week Jim Bullard was asked about it, and he said, look, Jay Powell's priority is to ensure the Fed remains independent.
He must protect this house.
Yeah, his legacy is not great as it relates to inflation, and he's been, dumped on, I'll say, for the last year or so. And so now I think he's almost thinking, I can stick around and I can continue to throw my weight around because people know who I am more than any other person on the Fed, including Kevin Warsh at this point, and he can have a strong arm effect, I think. And I think if he was really ready to bow out, I think he'd be doing the Derek Jeter, going to every stadium, accepting the beautiful gifts from everyone and, waving to the crowd. But he's not doing that. In fact, he's actually kind of doing the opposite.
He's hunkering.
Yeah. So we'll see what happens, but I would say there's a 20% chance he doesn't go anywhere.
Broadcom, Ben, you alluded to it earlier, but nice report there.
Yeah, and really it was even more than the report. It was the commentary on 2027. Basically implied acceleration to 2027. So market loved to see that. So the stock was up 7%. I don't know where it is now, but that's what they did. They let off so strongly on the conference call, basically saying they listed all their customers and said, Google, we're doing this, and next year it's going to double. And Anthropic, we're doing 1 gigawatt, and next year it's going to be more than 3. And Meta is going to accelerate to multiple gigawatts in 2027. OpenAI is going to deploy their first volume in 2027. So they're basically saying, you ain't seen nothing yet. Now, that's kind of Hawk Tan's MO.
Yep.
So we'll see how much the market buys that once it opens. But overall, he said the right things.
And some strong numbers from Fastenal on sales.
Surprisingly so. And importantly, the heavy manufacturing number was the best going back, I don't know how long, probably till 2021. Up 14.9% year over year in terms of daily sales there.
Squattoberfest.
Non-residential construction accelerated from 16% to 19.9%. So we're really seeing some remarkable growth on the Fastenal side. Fastenal is long been a tell for the industrial sector of the economy, and I'd put a lot into this, and probably more so even than the manufacturing side. We've seen good numbers in February from the industrials. We've seen what the stocks are telling us. March is going to be the make or break. For a lot of these industrial companies, 40 to 50% of their sales are done in the month of March in Q1.
Bang.
So it starts now.
Or as Trump would say, industrials.
Industries. This is March, folks. All right. We'll wrap it up there. It is burrito day at the office. So everybody get excited. Get your GLP-1s ready. Talk to you soon.